Good morning, traders. It is 8:01 a.m. Chicago time on Wednesday, the 29th of April, 2015. Derivatives trading involves substantial risk of losses and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. Quite a bit of news overnight. We'll start from earliest to most recent. Thailand's central bank again surprises with another rate cut over concerns that China's slowing down too much, its major trading partner. Sweden's central bank, the Riksbank, surprises and keeps rates steady but expands its QE program. This move sent the euro kroner pair lower by 700 pips. Eurozone private lending rises for the first time in 35 months, aided by ECB's QE program. Japanese markets were closed today. And then just now, a surprise to the market, Q1 advanced GDP annualized comes in at 0.2%, 0.2. This is Q on Q, 0.2% versus 1%. Expected personal consumption came in a little bit higher, 1.9 versus 1.7. However, the advanced GDP price index, which probably is going to influence part of the decision here for the FOMC today, the GDP price index came in at negative 0.1%, 0.5, positive 0.5%. Expected a swing of negative 0.6%. So we went from the expectation of 0.5%, and we got a negative 0.1% reading. This was the first negative reading since the advanced Q4 in 2008, and you recall what 2008 looked like. Core PCE Q on Q came in at 0.9% versus 1%. Pretty rough start there to today. The market's responding. We see a big move in Treasuries. I'll show you that in a minute. Treasury yields going up. The news triggered a move of from about 2107 down to 2097 quarter, about 10 points so far. Looking ahead, at 9 o'clock, 30 minutes after the open, we're looking at the U.S. pending home sales, expecting 1%. And then we have at 9:30, we have U.S. crude oil inventories expecting 2.5 million. Cushing crude expected at 400,000. Gasoline inventories expected at 1,000. Distillates expected at 700. I'm sorry. Gasoline inventories expected at 1 million. Distillate inventories expected at 750,000. Refinery utilization at 0.7%. And then the much anticipated number and the cause of a fairly quiet overnight session, the 1 o'clock Central, 2 o'clock Eastern FOMC rate decision, expecting 0.25%. Later on, after the close, at about 4 o'clock Central, 5 Eastern, New Zealand's Reserve Bank's expected to announce its cash rate. We're looking for 3.5% there. So a lot going on there. A fair amount of input into the market to reprice and so on. Let's take a look at our technical picture here. So here's what we got this morning. The overnight session's pretty sideways all the way through, and then we got to the point where we're making the announcement here at 2107 as the scene of the crime. And we have one 10-point rotation down to 2097 quarter. Remember, 2095 quarter is a decent support area. Let's look at yesterday. Yesterday, we opened in range, in value. As I'd said yesterday, the expectation is for slight responsive behavior, looking for a test lower, but overall, looking for it to be stuck between 2111.50 or so and the low. What actually happened yesterday is we did have responsive buying. We had a sideways market. We tested below, and then at this point right here, from 2099 to 2103 half, the expectation was for it to start rotating back up into 2106.50 for its initial resistance, and then 2111.50 for the LVN, and then for it to rotate in this mess. What did happen though is we got news early on that the Iranians seized a ship with an American flag on it and boarded it, and that caused a very quick and wide move to 2088 and a quarter. This was built on news. We put in a V bottom here, a pretty healthy low, a V bottom. We came all the way back to the scene of the crime at 2103 or so, and and we continued higher, and then we ended up pushing into that resistance area right into the close. So the the plan, yesterday's main hypothesis was actually on the money, but it was thwarted by this news event that pushed it down. But overall, the market auctioned as expected, with value in line. Point of control a little bit higher, but in range of the prior value area, which puts us in balance. The overnight high could not exceed the day high at 2112.50. Again, pretty decent resistance here at 2111.50, and now we've rotated down and are trading 2098.50. Given the fact that we are looking at the FOMC today, don't get too excited about the trade. It's likely that risk is whatever risk that was going to come off has probably come off, and I doubt that the higher time frame or the OTF is likely to put risk on ahead of the FOMC. So it's expected to be a fairly muted trade. We do have some numbers after the open, but after that, I'm looking for the book to the larger participants in here, to square up and stand aside until the FOMC announcement. Looking at what we've done here since October, we've pushed the 2110 high up to 2119.75 against the 2120 target. Here's where that target comes from. Here's the 2119.75 projected measured move that comes from this triangle and from a prior triangle. There's confluence at this level at 2119.20 and 2120 and 2119.75, and we've pulled back from it, where we broke out of this triangle, this large triangle that we've had here since the middle of March, or early March, and we've poked back in yesterday, and we're still outside of it. The strength is on the bull side. Note though, as we went through this process here since the beginning of this triangle, note that the delta is actually negative, 179,000 in the negative. So it looks like as the market is rising, as the stock market's rising, remember we're trading a derivative, we're trading a hedge instrument. That's the whole point of futures, is they are hedge instruments. As the market rising, it looks like participants are selling futures, are more aggressive on the bid, selling the bid, than they are lifting the offer, and that's to be expected because this is a hedge instrument and we are pushing new all-time highs. The alternative is to go to options, but with futures you can keep rolling a position, whereas an option expires out of the money and it's done. So this is probably why the slope on the delta is negative. It doesn't really mean that there's a divergence per se. It just means that the futures are being used for what they're intended, which is as a hedge instrument, which is expected in a rally market. Sounds like the market continues to push down. Here we are at the 95 quarter. This is our composite point of control. You can see here it's the black line. It's a composite point of control, including the most recent action. and we're right at it. I expect it to get choppy here, slow down, the selling to slow down. On that note, I'm expecting this to uh, get responsive on the open. So even though the news is pretty big, um, it's likely to give the FOMC something to think about. The expectation is for responsive buying on the open. Yesterday's opening swing was 2104 quarter, 2101 half. I expect us to move in that direction. We have three. Um, well, it's kind of a messy profile yesterday given the Iranian ship news, but we have basically three distributions here. The main distribution being where the point of control is. This 2105 down into the 2175. I expect responsive buying into the 2175 to push against the low of Monday. And then from there, if it continues higher, if it continues into this distribution, then I would be targeting 2107 on the buy side, and I expect it to be back to the scene of the crime. We'll see how that plays out. In either case, this is one of those days where I'm cautious, and I urge caution because it is coming into FOMC on some fairly decent news, and it's just not worth risking too much before we get the volatility of the FOMC, which is much easier for me to read than the grind down. So again, let's have a look at the overnight. You can see here it is pushed to 95 quarter on the dot. The POC, the composite POC, the composite VPOC, and is pulling back. It's likely to find a fairly stable low here and chop around for the open. I expect responsive buying on the open initially. If we don't, just remember what I've said before. Maybe you haven't heard it. If we don't get if hypo 1 doesn't play out and I'm completely wrong, that is the best possible signal I can get. Therefore, it's not in my interest, in my personal interest, to be right. The goal is not to be right as a trader. The goal is to collect information and play the odds as best as we can. Please remember that. I know a lot of people tweet and they're in chat rooms and they want to show everybody that they know what they're doing, but our goal here is not to be right, because that is and being right results in a flash in a pan kind of fame, so to speak, and it disappears. What makes sense is that you're here over the long run and doing what you love. Hopefully it is trading. And so if the market opens, and by making that point, my goal is to say if the market opens and we get initiative selling, in other words, strong selling on the open, moving away from value, selling down, and it looks like an open drive, that is a great sign. The expectation is for responsive buying towards 2107 ultimately, which is only 10 points away, well within a day's range. In fact, the most common daily range is 10 and a quarter here. The point of control of the daily ranges, the most common the mode, so to speak, of all of these inputs, of all these days ranges, is 10 and a quarter, and that puts us at 2107 in the 2107 area. So that's an attainable goal. But so the expectation is for 2107. But if it comes in and we find an initiative seller, and it's an open drive type opening, then I will look for a pullback, any pullback, a consolidation, or a pause formation, and we'll look to sell it for something, for some returns. And so the targets below that become the 2085 area. The 2085 area, and then the key target becomes 2076.50, which is approximately 20 points down. So that's assuming we get initiative, open drive type selling down into lower prices. So overall, the goal here is not to be right. I have no interest in that. It's nice to feel like to be vindicated or so for doing all the homework that you do, but really, in order to make money, you need to be just present with whatever the market's providing as far as information. That's where our returns are generated. I'll leave you with that thought. I could look at the I wanted to show you the Treasuries just so you know what's going on there. Treasuries have been in this uh, tight range for a little bit, and they've broken lower on this GDP release. They closed the gap this morning from way back, March 26th. Closed the gap and are bouncing up and are holding in this area. The most valuable price in the area is 29 and 2/3. So, uh, with a treasury dropping, yields are rising. The inverse correlation there. So anyway, we'll look at the what the FOMC has to offer. The FESX, the Euro stocks pulling back as expected, holding on to this high volume area. You can see the profile here on the left. Pretty good consolidation. We see a really good consolidation on crude as well. Been loving this product. I'm trading a lot. Crude has gone from a double distribution profile to a balanced profile, and it's coiling, it's consolidating. I think the next move in crude is likely higher, given the fact that we have come back from lows and have put in what looks like a kind of a cup and handle W formation type of thing. And it just continues to consolidate and not give up any of these prices. So I'm looking for this rotation higher again, into this 61 area first, 59, and then 59.40, and next 61 is what I'm looking for on crude. Anyway, that's all I have for you. Hopefully this was useful to you. I'll talk to you soon. Take care.